There we are. We're live. Here we go. Data day. We're going to talk a little bit about the market softening. We're going to also talk some rates. We're going to talk about volumes. We're going to talk about capacity, all that good stuff that you love on Data Day. I had my volume up a little too high. I think I just blew my left eardrum here when that music came on. Holy crap, is there a difference between that music and our voices, boys? Hey, what's going on today, gents? Wednesday. We're just talking about some thunderstorms that we're having in February, which is like, it's almost as asinine as the market. I got to tell you, like, you know what I mean? Like we see these wicked, crazy, right? You know what I mean? Never seen it before. And, it's been, geez, almost 10 years now, 20 years, I guess, 15 at least. I haven't seen what's going on in the market now in ages, Dean.
Yeah, did you read that article by FreightWaves about the 567 people that were laid off by 5 companies that are shutting down? Or, I mean, even DCs, like in Illinois, like Amazon DCs and stuff like that.
Well, it goes way beyond that, Jeff. I got a Wall Street Journal report this morning. Apple's laying off, Google's laying off 5% of its staff. Apple's laying off people. There's massive corporations, like both in the digital and commercial space, that are laying tons of people off. So it's, but you know what? I actually thought this was going to come sooner. And I keep going back to things that, Dean, that you said, where it was like, the companies that banked during COVID, they're kind of using that money to live right now. And, that is, I think it's running out. Or companies are at least saying, okay, whoa, time out. Like, we made all this money. Are we going to spend it now? Or like, what are we doing? And they've come to make some, unfortunately, hard decisions. I'm also, and I don't know if you guys are hearing it, but I'm also because I talk to a ton of sales reps. Payments are being delayed. Commissions are being delayed. I have some people I know that are literally fighting with management to get their pay. And they're like, Dan, I have no idea what's like. And so I think for me anyways, I think we're coming to a head where some of these companies are just going to say, you know what? I am not interested anymore. See you later. And other companies, because let's face it, let's call a spade here. Other companies are going to double down and win. And to me, I think this is a really horrible time when companies just like, forget about it. Let's go. It's like, I was having a conversation with a client yesterday and we were talking. He's like, my team is just not engaged. Like, they're not engaged to sell. He's like, Dan, volumes are down. And I'm looking at what they're doing. And he goes, I would think their output should double because they're not dealing with as much incoming freight and they're not, they have more time on their hands. He goes, but it's like they're out eating bonbons. He's like, I don't get it. And as a sales rep, I don't really get it either. And maybe you guys have some more insight, but as a sales rep, if your livelihood is selling and at least generating relationships or interest or anything, and I get it. Don't get me wrong, guys. I mean, I sell every day. There's days I wake up and I'm like, this is bullshit. I haven't got a reply in 2 weeks, right? Because it's just, or any reply you get, it's like, not interested. We're doing this. We're doing this. We're doing this. Or not interested. We don't have the volumes. It does. It becomes annoying after a bit of time. I think it ruins your motivation. It ruins your personal self-worth if we allow it. But now is the time to like double, triple, quadruple down on everything we're doing as sales reps. Figure out how to do more in less time, because the tides will turn. The tides are in right now. The tsunamis hit the shore, but eventually it's washing out to sea. We know this. I don't know. Am I wrong, or what are you guys seeing?
No, I'll tell you what. I'll double down on this. I bet you that a lot of corporations out there are learning a very good lesson, and they're going to take a look at their model and restructure it so that this doesn't happen to them in the future. If this happens to come full circle and come back to what we're seeing right now, maybe next year, 2 years, 3 years from now, I hope that they're doing that, and you're going to see a lot of M&As. They're still going to be out there, and there's going to be a lot of people out there that they're not going to make it back. They're not going to make it back. And even for myself, Dan, I'm going through brand, image, and reputation rebuilding to find consistency in what I'm selling and narrowing that down by refocusing on what we're really good at and where we're excelling. And even my partner and I have been doing that. Yes. And we're doing that, and it's costly. It is. I mean, it's not cheap to do that. But if you have that laser focus and an understanding, you'll be better off if you go back to the books and reevaluate what you have already and how it needs to be changed. People,
Jeff, I
can't lose
that
money again. They can't lose it. It's going to be a lesson where they're going to say, when we make $1 bazillion, we can't spend it like we did before because of what just happened.
It's interesting you say that. I've got a colleague of a friend of mine. I used to train, and he left a company to go work for another company. And I said, well, what was the main kind of thing? He says, Dan, during COVID, these guys were just like, look at this money. We're making so much money. He goes, and as soon as the tables turned, he goes, I'm fighting to get what I'm owed as a commission. They tried to change the commission structure on me because they were trying to keep more for themselves. He goes, they were questioning every single second I was out of the office as if it was like, and he's a commission salesperson. So it's, as a commission salesperson, whether you're on a draw against commission or whatever, you work for yourself. If you decide to fuck the pooch, you're eventually going to not have a job. And he goes, and like, I'm out. He goes, I have certain things I got to do. He goes, like, I'm doing well. I'm generating revenue. He was doing about 50, 60 G's a month, even in this time. So, he's doing good numbers for this period of time. And he says, and like, I'm 5 minutes late for work because I decided to stop and actually eat breakfast instead of just grabbing a fucking bagel. He goes, and my boss is calling me, where are you? What are you doing? He's like, I'm eating breakfast. But you're supposed to be at the office working. He's like, whoa. Like, and so I don't know. I see this mindset shift more than anything. And I think for all of you watching and listening, like if you're in the higher echelon of your corporation, just be very friggin' careful, because now is when salespeople will turn on you. Right? Like during COVID, not very many salespeople left companies because they were, there's huge numbers involved. They're like, if I leave, I'm going to. And now I think is a time where salespeople are going to go, you know what? I don't deserve to be treated like this. What company will treat me right? And I really think that's kind of the next shift, where companies are going to start losing sales reps at a dime a dozen because they're just not serving them.
Yeah, but think about this as well. Think about the new training opportunities that's going to come from this.
Yeah.
From what you're talking about, a total different type of engagement with your salespeople. Totally. It's not the same. They're going to have to reinvent their policies, their training, their work instructions, their processes, everything.
I think they're also going to have to reinvent their management, Jeff.
Oh,
like we all know, we've talked about it many times. A lot of people get promoted outside their capabilities, right? And I think management, just like they did with COVID, right? You look at now how many people can work from home, how many companies are getting rid of real estate and that 50, 60 G's a month rent because most of their teams are working from home if they're not locked in. Like we saw that shift when COVID hit, right? To now. And I think the next shift is going to be, yeah, for sure. I mean, listen, if you can manage working from home, your commute's a hell of a lot better. You don't have to deal with people cutting you off and shit, right? Like let's call a spade a spade. Perfect example. Dean goes to Australia, does a workcation for 2 months, and is massively productive. Okay. Yeah. If you can go to a McDonald's in Australia and still work as if you were in your house, I'm sorry. You have no corporation on the planet has any say about you have to be in the office because you're totally out, right? Like,
and have better internet than Jeff. I mean, come on.
Than Jeff, exactly. Sitting in Jersey on the water, sipping a red stripe by the lake. You know what I'm saying? So, all right. So, boys, with that being said, now that we all got that off our chest, I felt like 10 pounds lighter.
But then, We had Sarita Willingham on our show yesterday, right? And she was talking about this. She said, we're learning to do more with less. And that was a real theme of her. I said, what's different this year round? She said, we're working as hard as we can to do more with less. We've got less volume. We've got less lane density.
Less margin.
Less margin. We've just got more pressure to be leaner. And this is not this. I mean, this is February, right? So February is normally pretty bad, but
yes,
I think what we're still seeing this massive overcorrection from the pandemic. We're still seeing parts of it work its way out of the market now. I'm just looking at some insurance numbers this morning. The number of new entrants to the industry are down 30% last year compared to the prior year. So we're seeing, fewer people come into the industry. We're still seeing carriers work their way out of the industry, that, the more marginal carriers. Same on the broker side. We've seen, we looked at some of our over-the-road full truckload broker categories last week, a small sample of about 1,000 brokers over the last, it was about 10 years. I looked at the data. The long-term average in that category for the number of OTR, FTL brokers is about 350, right, in this sample. It spiked to 860 during the peak of the pandemic. It's back down to 350 right now. So there's been so this whole, when you look at this mountain in the data, like this peak in the data, it doesn't matter what data you look at, whether it's spot rates, number of new carriers, number of new brokers, number of warehouses. We've got Ibrahim Bayan on our show next week talking about warehouse capacity and has that bubble burst. So
that'll be a good one.
I just see this massive correction that's going on, but I fear, and I think you touched on it, an overcorrection on the downside. Because what could happen is we're all left scrambling. Spot rates have hit below 2015 levels this morning. In fact, they've been there for about a week. So excluding fuel, they're at $1.55 this week, right?
And think about that for a second, Dean.
Yep.
Think of the change that has happened to costs since 2015. I
can tell you, it's probably 35 cents a mile higher to run a truck, a small fleet. Even if you said, so this is going to be a really fascinating exercise, because I think a lot of carriers' floor is about $1.50. And I say that because the national average is $1.80 and it costs 30 cents a mile to run finance for truck and trailer. I think all of those smart carriers that paid off all of their debt during the pandemic can run for $1.50. I think that's about the floor, maybe a few cents either way. It'd be really interesting to test this theory, because we've talked about it on the show. I've never seen a spread in operating costs across the entire industry ever like this because of what the pandemic did. So we are, to put that $1.55 into context, that's 4 cents a mile higher than where we were in 2020 at this point. The pandemic hadn't been declared. Wow. But we were still shedding capacity. 2019 carried over into 2020.
Yes.
And so so again, another comparison. This week is the anniversary of the polar vortex in 2021. Right?
Yeah. Okay. Yes.
So now to give you a sense of how low the spot market volumes are and volumes overall, this was the week in the pandemic. So this week here was the week that Load Post, our spot market, went berserk because people were trying to move freight. Everything was stuck and locked up. 3 years ago, we were seeing 10 times the number of load posts on our load board 3 years ago than we are this week. 10x. Okay,
well, so during the pandemic, you were seeing 10 times the volume of
posts the polar vortex. Just the polar vortex.
Polar vortex. Okay.
Yes.
Okay. Yeah.
So to get so that market was crazy, right? It was everything. Capacity was tight. That was so. Just to put this current spot market into context, it was 10x during the polar vortex. It's normally double what it is now in other years. Normally double. So we're seeing.
So even without a
geographicality?
No. Like a situation like the polar vortex.
Right,
so
right.
Like whatever they call it, we're still way below where we would normally be. Like way below.
way below. And that's so. This is part of where we started this conversation about what everyone's doing in the market. You know, revisiting all of their practices, trying to realign costs with revenue. I think what we're seeing here is, certainly what looks like the bottom of the market, but this is a really flat February, which is something we've talked about for a while. It's going to take a while to work out of this. I'm not sure where we go, but the volume of freight that we're seeing in the spot market is incredibly low. And what that means, though, is you've got no volatility, and volatility is, I think, what we thrive on. I know at DAT we do, rate volatility, volume volatility. In Jeff's world, volatility means opportunity, right? Mm-hmm. Dan, same with all of the folks listening. Volatility means shippers are looking for help. When you have
let me ask you this, Dean. I hate to interrupt you, but I have this thought process here. What do you both think about, and I think it's really relative. Long-term RFPs. I think that is the biggest risk right now for anybody out there that's doing that. That's why I will not do that. If anybody's looking for long-term, I will back off of that. Unbelievable, because it is, like you said, it's volatile out there. Nobody really knows. You just hear second quarter, third quarter, whatever. But what if? I mean, does anybody ever think of the what ifs? And if you do this, and what happens if it doesn't do that? Right. You think things are bad now and that you're just getting by the skin of your teeth? Right. You have no idea. You have absolutely no idea. You're going to get crushed like you've never got crushed before.
Let's look at this from a 360-degree view. Let's look at this from a 360-degree view, Jeff. As a shipper, you've been in long-term RFPs before, right? Sure. So any shipper over the last, call it 4 to 5 years, that's been in long-term RFPs has caused massive nightmares when things shift. So as a shipper, why would you even want to do that? Like think about it. How many shippers anybody out there, please comment, share, DM us, let us know. Bet. But if you've been in this long-term RFP and then the market shifts and your RFP numbers are here and you can get these numbers on the spot market, you're immediately moving to the spot market. And vice versa, if your RFP is here and the shipper can get these numbers on the spot market, we've seen it before, they move to the spot market. Yeah. So why would you ever waste your time, energy, and more importantly, your money? Because RFPs cost a lot of money. A ton
of money. But the other thing too, Dan, is that when you're talking about jumping to the spot market, whichever is higher because you want to make more money, either that's going to happen or the carrier rep is going to take a real careful look at his OR and he's going to say, hey, shipper A, listen, I know we have the long-term contract in there, but I have to take a 5% increase. And here's the reason why. If you're a shipper, you don't want to hear that crap at all. You don't want to hear that.
Especially after the last couple of years.
Yeah. That's the worst thing that you want to do. That's why I'm saying they're hedging their bet. And it's something they shouldn't do. They really shouldn't do because it's going to kick them in the ass so hard.
Right. But let's also look at this, Jeff, right? Let's call it spade a spade. Mm-hmm. After a market like this, if rates change in specific areas or in the market of your supplier, they're moving. Right. End of story. No ifs, ands, or buts. Like the fact is the fact. If they are taking a beating right now, when the shifts change and there's more money to be made by not dealing with you and dealing with somebody else, they will move to deal with somebody else because they have to make money. Absolutely. And I've been in the industry way too long. I don't get me wrong. And I'm not trying to go down the relationship road here, guys. And I understand relationships, but relationships only go so far. I've had plenty of carriers I've treated like gold that have said, Dan, these lanes are paying me more. Can you get more out of your customer? Like the customer won't budge. I got to go. Because, and I honor that because they're trying to make money. Like we're not in this for practice. We're in it for profit. Again, call it spade a spade. All of you out there are like, oh, no. I do this for free. That's bullshit. You wouldn't.
Right.
Okay. You might do it for a week for free. And then you'd be like, damn, I need to pay my mortgage somehow. You won't do this shit for free. That's it. But so it works both ways. And I think in speaking with shippers, they're sick of the up and downs. When the prices are up, they feel like they're being screwed. When the prices are down, they feel like they're getting a deal, and vice versa. When the prices are down, carriers feel like they're being like it's. And I don't think we're ever going to change that.
Right.
I just don't think the mentality and the mindset will ever shift. Sure, you might find the odd few. I've had many carriers in the past that have worked with me through thick and thin, and we've agreed, okay, we're going to give you half the volume that we gave you because we have to, and okay, no problem. And over time, we've built up those numbers. But I mean, I think we're at a serious crossroads. I think it's coming down to, I agree with you. I think the floor, people are about to smack their head off that floor real fast. And I think the next even the next 60 days, I think is going to be a huge determining factor of what our industry looks like at the end of 2024.
Yeah,
I really do. And I think
they're going to look and revisit the process of the RFP as a process. And when I say that, no more long-term RFPs, 3 to 6 months tops, to protect themselves, to protect the shipper. Because like you said, Dan, if it goes in reverse and then all of a sudden they're paying more and you think that balance is going to be there, because that's what they're risking. They're saying that it's going to go up, it's going to go down and whatever. And when you look at the bottom line, it's going to equal zero at the end. No pluses, no minuses, you're hoping. But if that doesn't happen and you think you're raking somebody over the coals in the beginning and then all of a sudden you're losing your shirt at the end, that's not the right thing. So protect your shipper, protect your assets, protect your business. Short-term RFPs where you are just transparent with your customer and you say, listen, I'm not that long-term RFP kind of guy. I want to revisit every 3 months to see where you're laying at, to see where I'm laying at. We'll bring in our carriers. We'll have a round table. And we'll just have that discussion because it really relates down to new product launches, everything, claims, cost per pound, all that kind of stuff changes the whole dynamics of an RFP and cost. So I mean, that's why you have to have those conversations with those shippers and your carriers. It's a group effort, and sales and operations as well. It's all key stakeholders in this thing, but no more.
So I wanted to share something with you guys. I have found over the last 2 weeks, and I've waited for a bit to talk to you guys about this. Obviously, I'm increasing my outbound reach. I'm increasing my sales calls. I'm increasing the people I speak to. I am finding more and more getting replies from actual manufacturers, shippers. They're going to their own fleet. They're saying, our major lanes, we have, we used to have 5 suppliers. We now have 2. And the 3 suppliers we've replaced with our own fleet. And I went, and I'm seeing this more and more. And I don't know if you guys are hearing about it, or Dean, if you're seeing it on some of the, when people come in and actually get to see authorities and stuff. Even to the point where one of my customers, instead of paying per load, he struck a deal with a major Canadian carrier, because they do like a ton of, Moffat flatbeds, roll tight, delivery distribution, US, Canada, across Ontario, Quebec. Huge company, like $12-13 billion company. And they struck a deal where they pay the insurance, the drivers, the truck, plus a premium to the company instead of a per load basis. And what they're doing is the company is actually hiring and laying off drivers for the transportation company. And it's a process that I've never seen before. But the guy that I deal with there, he's like, no, it's the easiest way to do it because now I'm in control. They come to me and they say, okay, we can buy futures of fuel with this. He says, go for it, pay the check, done. And so shippers are actually becoming kind of like the operations team for carriers. Really, really interesting. And I'm actually going to go meet with the customer today because I want to dive more into it and talk more about it and see where I can get into the mix of what he's doing. So I'll have some more info for you guys next week, but I thought it was a really interesting situation where he's like, yeah, no, I don't pay per load anymore. I hire the drivers on my own. My team dispatches them, not their team. My team is linked into ELDs. My team is linked into their dispatch software where I'm sending them messages, and pretty interesting stuff.
Yeah, you know something. This isn't new, and let me explain. It really depends when you're looking at the profitability of the operation by running your own fleet. And let me explain. You know, you can have the mix where you'll have your own fleet for the super regional and regional last mile delivery, and you'll go out and you use other assets or brokers for the long haul, because it costs them more money on the long haul than it would, you know, if they use a broker or go straight to an asset, compared to using their own fleets with lift gates, doing inside delivery, white glove, you know, final mile kind of thing. So that mix has been out there, Dan, for a very, very long time. But
was it maybe more of a US thing over a Canadian thing then?
I don't know, but I'm saying, you know, they hire they hire a transportation manager who does exactly what an asset based carrier would do. They have the mechanics, they have all, you know, an umbrella of their insurance. They pay their drivers per mile or a salary per week to run their fleets, and they rotate them just like you get rid of your trucks every 3 years and get new ones in there and everything. And they figured it out that the long haul isn't profitable compared to the super regional and regional deliveries when they have that control that you talk about, because they're always back at the hub every single night, you know, when they're doing that, depending upon the network design. So, yeah, it is interesting, but it can be costly if you don't know what you're doing.
Right.
That's I agree.
So Dan, I just looked at some private fleet numbers, up 2% since the start of the pandemic.
Up 2%?
2%. The number of trucks in private fleets. This is interesting. Most of the growth, and I think this is where the National Private Truck Council average private fleet size fits, but most of the growth is in the 100 to 1,000 truck range. Right. So I think that's where the average, I can't remember the exact numbers from their benchmarking report, but that gels with what you're talking about, and also fits with what Derek Leathers from Werner said on his earnings call 2 weeks ago, that you know, the number of trucks in our fleet are 63% in dedicated. We want to grow that to 70%.
Yes.
And Schneider,
well, I know a lot of companies that their trucks only focus on dedicated, and their brokerage handles everything else.
Yeah.
Right. I mean, and I think it's a great mix.
They're long-term contracts, right? So, but I think, so the flip side of all of this is, and Jeff touched on it, right? So one of the things that comes out of this on the downside is sort of this demand destruction where or routing guide destruction, where you see contract rates suddenly become less profitable than the spot market. And Zach Strickland and Freightways had a really good point in his chart of the week. And he said that there's no sign of a demand shock type event, but there rarely is any warning. Think Ever Given, polar vortex, pandemic. You know, so this is sort of this, we're being lured into this false sense of sort of complacency right now, because there's just no volatility in the market. It's just, there's nothing happening. It doesn't take much to upset this market, I think, because we're squeezing everything. We're doing so much more with so much less that there's not a lot of room to go. It feels like that. I may well be wrong on this, but that's where we sit right now. It won't take much to flip this market around.
I don't think you're wrong, Dean. I also think we're talking generally, where if somebody was in California right now, they'd be like, dude, you're totally wrong, because it's market driven, right? So,
although,
you know,
12 feet of snow predicted in Tahoe this weekend. They've got a 3-day blizzard. 12 feet.
12 feet.
Talked to my son last night in Lake Tahoe. So I was out there last week. I was out there last week hoping to get some good footage of drivers with chains on going up the Donna Pass. Beautiful and sunny. The day I leave, starts snowing. And so what will happen, this is fascinating, because the whole Pacific Northwest is getting a deluge of rain, but in the Sierra Nevadas, they're going to get swamped in snow, and it'll shut down I-80. I can tell you right now, from Reno to Sacramento, they will shut I-80 down. And because I've seen the boom gates at Truckee on I-80 at the bottom of the hill, they just shut that bad boy down. And that will block up traffic on one of the busiest interstates cross country in the country. And it'll force carriers to head south to I-15 or I-40 to get around that particular situation. So there's some pretty bad weather happening that could change that market. I mean, but I don't know that it'll move the national needle like the polar vortex did.
Yes. Yeah. I still haven't even got past the 12 feet of snow. That is heaven. That's heaven. I mean, like I'd be jumping off the roof of my house just to land in the snow and play.
So much snow that they're going to close this Palisades ski resort where they just had World Cup last weekend. There's so much snow they can't even open the ski resort.
Yeah, that's where my nephew lives out in Lake Tahoe and runs a restaurant out there, and he's an avid snowboarder. He's been on the X Games, you know, and he just loves this stuff. Yeah. You know, he'll climb to the roof of his building and snowboard off the top of it all the way down into the road.
Yeah, for sure, man. 12 feet, holy crap! And we're having thunderstorms in Canada right now. We had the biggest thunderstorm. I mean, I've never seen we talked earlier. I've seen snowstorm one in December, but we had thunderstorms, full on lightning, torrential rain, and we were February 27th. And typically it's minus 20 right now in Toronto, like north of Toronto.
Crazy stuff.
Insane. I'm speaking to a customer in Tennessee yesterday, and it was like 84 degrees. And then today it was going to be like 22 or something, he said. Like it was, the shifts in patterns are just, in weather is just so incredible. It's unbelievable.
That sounds like Colorado with the jet stream where you're out on your deck grilling one weekend. The following weekend, it's like 20 below and 5 feet of snow. You know, it's unbelievable.
So, gents, I know we're running out of time here. Dean, is there anything you had quickly to shut her down and kind of give people, or did we go over it?
Road Check Week coming up May 14 to 16. So Road Check Week, put that one on your calendar. They're going to be checking on controlled substances and brakes. Controlled substance means they're in the cab. That's a whole nother level of inspection when they start to get inside your truck and look through the sleeper cab. Be warned. And next week, I think next week's show is going to be really interesting. Talk about commercial warehouse space with Ibrahim Bayan.
I'm looking for the update on that, Dean.
Yeah,
I'll be watching the show for sure. So when you say controlled stuff, you mean like THC gummies, any kind of that kind of stuff, alcohol, that kind of stuff?
Stuff I've got no experience with. All of that nasty stuff that you take to stay awake behind the wheel. So all of the banned substances, right?
Okay.
Dramamine.
Got it. Okay.
Duramine, pseudoephedrine.
Yeah. Acetophedrane. Yeah, all that.
Yeah.
We can have a class on that. I could run a class on that. But
yeah, for sure. For sure.
Hey, I took that stuff when I drove from Sparta, New Jersey, straight down to Siesta Key and drove 18 hours, man.
Wow.
I definitely took a couple of those.
Wow.
I've always been a monster guy, and it just does fine for me. I'm just like, as I'm going. All right, everybody. Have a fantastic day. Gents, we'll see you next week.
There you go.